Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SOFI stock. In today's video, we are going to specifically talk about why the SoFi stock price is falling right now, and how high the share price could actually go over the next 12 months. For more videos on SoFi Technologies, remember to go and smash that like button right now, comment your thoughts down below on how high you think the stock price will go, or maybe how low you think it's going to go. Remember to subscribe if you are new, and without further ado, let's jump into today's stories. So today we are going to be analyzing 3 articles. The first one is going to enlighten us about why the SoFi share price is falling right now, and if this share price decrease is justifiable. The second article is going to go into more details regarding why the SoFi stock price is really falling right now, and if this could really weigh down the stock price over the next year or even longer. Then finally, we're going to talk about SoFi Technologies' debt and how they could perform in an all-out recession. So without further ado, I say let's jump right in. SoFi Technologies is a fintech company or a financial technology company that offers an all-in-one inclusive digital app which gives their consumers access to various financial services and financial products. Right now, the SoFi share price is trading at $4.80, while professionals believe the company could be trading anywhere between $6 on the low end and $11 on the high end. SoFi Technologies literally has fallen around 6 to 8% just in the last few days, and the reason for this stock price pullback is because members of the US Senate Banking Committee sent a letter to the company regarding their various cryptocurrency activity. The reason why this letter was sent out is because SoFi Technology operates their own brokerage account and cryptocurrency exchange, where you can buy and sell stocks as well as cryptocurrency. And that's why the US Senate Banking Committee is specifically looking into whether or not SoFi's crypto activities are in compliance with the US banking and consumer protection laws, so anyone who is using SoFi Technologies to trade cryptocurrencies and or buy or sell them can be protected by these laws. They are essentially making sure that SoFi Technologies is compliant with the various policies that the government has instituted. The problem here is that a lot of the laws and policies surrounding crypto are very ambiguous and hard to capture by a company, and this is what has made various investors sell and liquidate some SoFi shares, which has brought the stock price down. The Federal Reserve sent a letter to SoFi Technologies, and a part of it says, and I quote, "SoFi is currently engaged in crypto asset-related activities that the board has not found to be permissible." End quote. Now this is very interesting. I wonder what specifically the Federal Reserve has found that SoFi Technologies has violated, or at least a practice that SoFi is doing that is not permissible. Sadly, the letter doesn't go into much detail about what exactly SoFi Technologies is doing wrong. However, the Senate Banking Committee and the Fed gave SoFi 2 years to reach compliance with the various laws and policies surrounding cryptocurrency. I personally think it's somewhat unfair of the Senate Banking Committee and the Federal Reserve to call out SoFi Technologies on this, because they are not the only company that offer cryptocurrency products. Another thing I find quite unfair is that the letter doesn't show or tell SoFi exactly how they are in compliance with the current laws and policies. So how could SoFi possibly know what to change in their technology platform to then come into compliance with this law? Ever since SoFi Technologies received this letter, they have agreed and promised not to increase the types of crypto products that SoFi Technologies is currently offering consumers. And if you're not familiar, right now, customers can buy and sell more than 30 cryptocurrencies on SoFi Technologies' online brokerage. Another reason why this is extremely applicable right now is essentially due to the whole FTX debacle, which has gone on for the last few weeks concerning how a cryptocurrency exchange named FTX has essentially over-leveraged themselves and now are completely bankrupt. This also goes for other cryptocurrency exchanges such as Celsius. In a nutshell, these cryptocurrency exchanges were growing and scaling extremely quickly, but by doing so, they are over-leveraging themselves with various debts and not holding enough actual cash or liquidity on their balance sheet Now, I want to be clear, this is not a problem with cryptocurrency itself, but rather the exchanges that are selling consumers on the next big cryptocurrency exchange, to where consumers and investors are gravitating toward these newer cryptocurrency exchanges, which then go bankrupt and take all of these people's money. So the problem is not with cryptocurrency as an asset class, but rather these cryptocurrency exchanges. This is one of the reasons why I personally never advocated to join FTX on my personal channel, even though I would have received a large kickback opportunity and money from them for doing so, and having people sign up with them. I didn't really like how the exchange was actually laid out, and their balance sheet was extremely weak. So there is clearly a lot going on right now, and we're still not sure what the Fed sees wrong with SoFi Technologies. We still don't know what that is right now, which is not only unfair to the company, but rather the company's customers as well. This is also artificially pulled back the share price of SoFi Technologies, because consumers and investors are getting more and more worried about a full-on cryptocurrency asset meltdown. And if that happens, we could see a plethora of other exchanges and even brokerages that support cryptocurrencies go out of business. So this is definitely something to be aware of, but in SoFi Technologies' case, I don't think they have to worry much about this compared to other exchanges. For instance, some other brokerages, such as Robinhood Markets, offer fewer cryptocurrencies than SoFi Technologies. However, I think Robinhood is much more aggressive in their marketing to consumers about trying to buy and sell cryptocurrencies on their particular platform. So there may be only a matter of time before the Fed starts to tighten up on cryptocurrency asset policies in general, which would cause a plethora of various brokerages and cryptocurrency exchanges to come under fire, thus adding to the overall stock pullback that we are experiencing in the overall market right now. Lastly, the Senate Banking Committee also asked the CEO of SoFi Technologies to respond to their various letters, but as of right now, the CEO has not responded as of yet, and I honestly think that's pretty wise. The CEO should talk to the board of directors, they should get a plan, and locate what exactly SoFi is violating here. Or could it be that a certain political party is just trying to gaslight SoFi Technologies and bring the share price even further down? And if this happens, like I've talked about a multitude of times on this channel, once the share price of SoFi falls so low, I personally think probably around or below $3 per share, that is when the management at SoFi Technologies will implement a reverse stock split. That could initially cause the stock price to surge and increase based off of hype, but then we are going to see the share price fall further down, because normally reverse stock splits are surrounded by negative market sentiment, and that causes investors to liquidate due to market psychology. So all in all, we really hope that SoFi can identify what policy or law that they are violating in terms of the cryptocurrencies, but it all could come down to how much money they have on their balance sheet. For instance, as long as SoFi Technologies has enough cash and liquidity on their balance sheet to where even if the overall cryptocurrency market crashes, they could still pay their consumers if their consumers decide to liquidate their crypto. And I think that's the big problem that SoFi Technologies is facing right now, and that's exactly what the Fed is worried about. So this then begs the question, how much debt does SoFi Technologies have, and how much liquidity do they have on their balance sheet to pay off various consumers if they decide to liquidate their cryptocurrencies? Well, as of November 9th, 2022, SoFi Technologies' total debt amounted to around $4.61 billion, with $45.73 million of this being long-term debt and $4.75 billion in current debt. Now, if you're not familiar with these metrics, long-term debt is essentially debt that lasts over 1 year, and current debt is debt that is due within the year. So just looking at this right now, we can see that SoFi Technologies is in a lot of debt, but this is not necessarily bad, and I will talk more about that later in the video, where there is such thing as good debt. But for companies whose market capitalization is only $4.52 billion, they literally have more debt than they do their overall valuation as of right now. However, we do need to adjust this because they do have a decently strong balance sheet, which currently has $935.16 million worth of cash and or cash equivalents, which would be liquidity that they could draw from at any time, or at least on short notice. This would put their overall outstanding net debt at $3.68 billion, which is much more reasonable. To get a better view on the company's overall debt and their ability to pay off any of their liabilities, we can look at what's called their debt ratio, to where we can look in and understand the degree of financial leverage the company actually has. And all we have to do is take their total assets, which currently equate to $15.83 billion, and compare it to their liabilities. And we would get a debt ratio of 0.29. As a rule of thumb, a 1 for this ratio would indicate a considerable portion of debt that is funded by assets. And in English, this means that we would want the debt ratio to be as low as possible. And clearly, it's only 0.29, which is definitely further below a 1, so I would say this is somewhat acceptable for a finance company such as SoFi Technologies. We also have to take into consideration that various debt ratios will be different depending on what industry we are looking at. For instance, because this is a finance company, we could say that we could intend and look for a higher debt ratio compared to other industries. Again, this means SoFi Technologies is looking pretty good. If you want a visual representation of their overall long-term debt compared to their current debt and their cash equivalents, you can look on screen right here, which goes over 2021 quarter 4 all the way to quarter 3 of 2022. Now, like I said earlier, there is such thing as good debt, and that's the majority of debt that SoFi Technologies has. They are using this debt responsibly to grow their overall business and acquire companies. Therefore, debt is actually an important aspect of this business that provides capital structure for the company and contributes to its overall growth. On top of that, it's better for investors, in this case, for the company to finance compared to raising various equity when it comes to executives trying to raise capital for the overall business. Essentially, would you rather have them dilute shareholders or take out a loan? In this case, I would much rather have them take out a loan, because if they are going to dilute shareholders, that is not going to be a wise piece of business at this current time, in my opinion, because that could cause the stock price to crash even further. So where does this leave us? Well, I would say they are taking on an appropriate amount of debt considering their overall industry and their debt ratio. Now, this also means that they have a decent amount of liquidity on their balance sheet, almost $1 billion, to where even if their cryptocurrency exchange goes bottom up, they should be able to pay off and pay out to their consumers if that actually happens and consumers decide to liquidate their cryptocurrency. So I don't think what happened to FTX will necessarily happen to SoFi Technologies, but we definitely should keep our eyes and ears up for this particular story and how the Fed is going to treat SoFi Technologies. Also, in the short term, I do think the SoFi stock price could fall even further in price. However, that would just be due to the overall macroeconomic environment, which is very negative. But I would love to hear your thoughts down below. Go ahead and smash that like button for more videos on SoFi Technologies. Comment your thoughts about what you think will happen to SoFi Technologies in the future. Subscribe if you haven't already, and I will see you in the next YT video.